Crypto market is showing a little bit of strength right now. And when we go on to the short term charts, it shows us instead of breaking to the downside, we happen to bounce to the upside. But look at the RSI, it already hit the resistance on that short term. So we are slowing down there. If we do not break this RSI on a short term, that does not look good. So even though we see some green here in the general market, there is a little bit of concern. So what's that? It's definitely not this, because this guy, whatever he says, you can kind of do your research and you're like, this is what BlackRock says. This is what the government is doing. So it kind of gives you clear signal. Here you get a mixed signal, but here you kind of get a clear signal. Then you're looking around the globe and you feel like, okay, the liquidity crisis is here, and these kind of thought process may not be reliable. And even during these times, the hard times, when you see a company improve, when you see the fundamental increase, that's the next level on which the company is operating. So technically, you're coming to look at the market because the price right now does not care what the company is doing, because the market sentiment is too bad. People are so depressed, right? So you have to go look at what the history suggests to you, what is the pattern which you can observe here, and then you're looking for like, okay, what happened in the past when the market showed you that pattern. So here, that's a right angle descending wedge, which usually breaks to the upside. So you got to see how price action works this pattern out, right? We can see all different type of history in different asset class. Here we are looking for, say, the opposite is this. When you're doing this, you go down. When you're at the bottom, you get an opportunity to break to the upside, which is something like this. And that's where you actually see assets like Ether is right now. So if it's actually coming back down, that's still okay. You're still in the pattern. Now, some of the assets, even though on a macro trend, it's bullish, it's going high. Right now on the short to medium term trend, it suggests like, okay, usually what happens is when you go up like this, you get to see a little bit of correction. Now, how deep it can go, we have to look at the market. But right now, it just suggests to you like, okay, there is still a possibility. It will only get invalidated when you go through this. And this is different for different assets. When you are here in the market, you see a lot of different assets trying to burst, trying to do things which a lot of others are not doing, right? So right now, we are going to go through all of these assets and see what's the possibility, and if things are going on the positive note with the CPI and the Fed rate hikes, what can we expect? Welcome to the Scientific Investor family, where the normal retail guys learn how to become the next top 10%. So when you take your time to learn through these patterns, you kind of get an edge in the market, because when you observe this one, you're like, okay, fine, I do see there is a possibility this can go higher. Fine. Now that's a 4-hour chart. So even if it's going up, your measured move is not going to be gigantic, right? So now you'll have to actually zoom a little bit out and see what happens when that short term plays out, how the medium term, long term change, right? This is the medium term scenario where you look at this like it was a resistance here. It turned out to be a support here, and right now it is acting as a resistance. So when you break through this one, what happens? Now you're above this. So your possibility of reaching the next level here is now higher, which is like 1600. Right now we are close to 1300 in Ether. So you clear all this and just take note from the indicators. So the indicator RSI actually give you the idea that it is slowly grinding higher. It broke higher. It is maintaining on this level. And right now it is trying to bounce through this pattern. You'll have to literally zoom in and plot it to be on the accurate side. You're above this resistance. You're trying to trend higher, which is a positive news. So when you look at the general market for the altcoins, this is what we see on a daily chart, right? We are looking at like last 5-6 months, and the price has been in a consolidative range. So if you actually make this a little bit brighter, this is your top end resistance. And this is kind of the Wyckoff reaccumulation range which we are observing. So if you take a note of this one, you will actually watch something like this evolving in the market. Now, this is not yet confirmed. We don't know what the price is doing, but we are trying to look back at the history and see like the macro. This is macro. The macro level at which you saw the accumulation is at this range. You can clearly see this range acting as a macro resistance support range, which kind of gave you that accumulation. Now that's actually a big thing. And right now, the price is trying to put in a reaccumulation pattern after the first big run up. So if history repeats, this does mean you have upside. Now, how long it can go will also depend on the macro scenario, because right now we do see things changing. We do things, negative signs starting to come into the market. So next 3 to 6 months, we would see even more cracks in the economy for sure. So that time window is most likely going to be the key area where we want the crypto market to do great, right? So we actually look at this trend line, trying to connect through all these resistance, and we kind of have an argument here like, with this recent bounce, we are trying to retest and bounce from this range. Now, the standard deviation for the last fake out here is still valid. So now that's standard deviation, right? The risk, the volatility level, you have to actually literally look at that one. So here we can say this is your support resistance range, but you do get the standard deviation at the bottom too. So right now, if you move through the next 10%, if you plot that to be on the accurate side, yeah, 10%, now you break through that too. So you are literally looking through a corrective channel, and a breakout will give you the odds turning towards the bullish side of it. Now, yes, on the daily chart, that's what we can see. So if you are a macro guy and you're like, okay, I'm here for the long run, still I would argue that consider next 3 to 6 months as a key range because of the macro things evolving, right? If the central banks go on full acceleration with the money printing, governments start cut taxes, okay, instead of dropping huge, which, even the governments are having the hard time. Now, when the government here giving money to a pension fund, they don't have money. They literally have to go to the central bank, bonds, and then get money. So government sell bond, take the money from the central bank, then they give it outside. So that means the Reserve Bank, central banks will have to print money. So now coming back here, if that happens, we know last time when that happened, how it turned out, right? People get money, institutions get money, but this time it can be a little bit different. It won't be directly going to retail completely. You will see a lot of it going towards the institutional side. Last time, there was a lot going into the retailers as well. Now, it will feel small, like 1,200 checks, but it was for a lot of people. Now, that being said, institutions did get a lot of money last time too. So in this scenario, we try to break back above, and now you get to see, okay, history is repeating itself. We did get these patterns, and we are still waiting for a rounded move back to the upside. And here it is. If we actually bounce back based on what we just saw in the price action and based on what we can see here in the RSI, now that's actually a positive narrative. Great. But again, this is not happening this week or the next week. Now, if the CPI comes way lower than expected, say 0.4, 0.5 down the expected, which will be positive news, markets would rally. And on the same day, if Fed goes 35 basis points to the upside, that's again bullish for the market, even though 35 is historically high. Right now, the market consider that as low. It's all relative, right? So if we put that price action in the picture, we can put an argument here. This can be the local bottom or the wick lower. Now, to look at that in that way, we'll have to be on the macro scale, saying this is a monthly chart. This was a wick lower. We are going back up. But we still have a long way to go in this month. And literally, this range is going to be a big resistance. Why is that? If you look at this, last 1, 2, 3, 4, 5, 6 months, we have been in this range. It's hard, it's painful. Great. We all understand that. So if we are able to bounce back through this, that's now okay. Now understand, in last 6 months, what happened in crypto space? There was a ton of bad news, a family of black swans entering, and still you did not go back here. That's a hard thing to understand. You did not go back to where it started. You're still holding on to a level which is above the macro close of the last all-time highs. A lot of people do not actually consider this. They all say, okay, the market went down, the market is going down. For individual assets, yes, they came back lower. For a lot of assets, that is true. However, if you look at the general market to understand if money is entering into this market or it is leaving, it kind of gives you a trend. It kind of gives you clear mentioning that each assets will be different. But to be clear, the general market perspective is this. So inside one wave cycle, say one market cycle, you'll see 3 wave cycle. And last time we have actually observed, now this is really important. Last time we have observed some assets did not move up at all here in this cycle, right? Even though you actually observe that the entire market did like 8x, some of the assets did like 10, 15x. Few chose to do 80 to 100%. That's it. They didn't move, right, when the entire market went up. Then on the later stage, entire market did go well, but this time the assets which did not move last wave did the most, which is impressive actually. So if you are in an asset which did not move much and dropped a lot with this correction, and it is still above the support, now that's going to be something which you'll have to underline, is still above the macro support, it will bounce as the market goes back up, and it will give you above average return because it does have the historical standard deviation. And the last wave cycle, this price action was not positive. So it's at the downside. So if you are plotting that on the negative to positive range, when you are at the bottom, that's when you have the higher odds to make money. And right now, say XRP, if you look at the average market fluctuation, last time take it from the bottom till the top, it's close to, say, for example, 40x, 45x. XRP did 16x. That's way lower than the average, right? And it is above a macro support, which means it is going to be one of that coin which will perform or outperform the market in the next wave. Now, we've been waiting for this from a long time. The market pushed us this low in time frame. Right now, we are still here waiting for this 3-day to cross back higher. We are waiting for this RSI to show us a breakout. We are literally getting close to the resistance the next time. And this time, it also happens to be CPI and a possible change in the Fed decisions. They were doing 25, 50, 75, 75, 75, 75. And this time, if it is 50 or anything below 75, it shows you the interest rate hikes went up. Now it's slowing down or dropping. Slowing down is okay. Dropping is positive for the markets. Markets are going to price that in. And that is a time where we can expect this RSI to break higher. Now, what if Fed does a 75 again? That's going to be one of the biggest bad news, which we won't be too much worried about because we've been going through this macro cycle for a long period. But on the other end, you will see dollar breaking back up if that happens. But if not, you will observe, which is the highest probability. I personally think like 90% odds stands for something below 75 basis point hike with what's happening in the economy right now. And you look at how the dollar is reacting, how the market is pricing in all these. This is the short-term trend line. You broke that to the downside. And then you can literally look at your long-term one. Now, this can be like different traders will plot it differently, but still you can look at this either this way or connecting this. The reason I did not do this because I consider this as the bottom and the reversal started from here. So for me, if I'm using this, I would say this is a trend line which you can wait to see dollar coming back down to. Say 100 is going to be that range where you are going to slow down to the downside for dollar and the asset classes will start to move up. Silver is already at the resistance. If it's breaking higher, commodity markets goes up. Look at the RSI, look at the MACD. They are already giving you these signals on a weekly chart, which is actually great. Now, gold, it's again doing the same thing. Going back into the trading range, we broke below this range, and right now it's literally the Wyckoff spring for the reaccumulation range, which is actually bullish on the macro. Because if you're actually going on a daily chart trying to see what pattern the chart is actually suggesting you, and you're not doing much, right? You're just taking this low, you understand this low and this one, and if it is breaking through this range, now you got your answer. That is an inverse head and shoulder on a macro level, which has a measured move of like 11%, and 11% fluctuation in gold is a big thing. Now, understand the majority holders of gold is central banks. So if this is going up, it's now at the all-time highs range. Great. So you are going to see FOMO in that from institutions, governments, retailers, and the price will still go back up. So right now you'll have narratives where you need to understand stock market is doing something. Not all stocks are doing same. Say Tesla here is trending lower. It is trying to make a bottom here to put in an inverse head and shoulder. But Netflix, even though inside a short-term corrective pattern, it's trying to bounce back up. It is creating a narrative of new trend formation, right? So we are looking at all of this, which is happening in the market. The entire industry is showing you, okay, I'm trying to do a bottom, and we don't know whether we are going to hold this level. If this week, when the next CPI comes, say next 7 days, we get positive things, this is going to break higher. So those who are waiting for those who are waiting for another 50% drop in the stock market will be surprised if the CPI is lower and Fed decides to go on a 35 to 50 basis point hike. Now, what does that actually mean for crypto market? If you are like, I'm completely in crypto market, that's great. Because when the risk on sentiment comes, crypto is the most riskiest asset class which you have right there. Now, if people are coming out, you will observe a lot of them coming into crypto market, because most of them who have the risk tolerance level is literally going to look at this instead of, okay, I don't understand much about stock market and I don't understand anything about crypto. What should I do? That's what a normal retailer who comes in thinks. Like, stock market gives you maybe 3x, maybe 5x, but the crypto gives you 1000x, right? So the narrative actually pushes a lot of people in, and even if you are making 10x, it is actually a huge gain, but people will undervalue that 10x because they are expecting the 1000x. And there are assets which can give you 20, 30, 40x, like what we saw here. If the market did this last time, and a lot of assets did way above that. If you go look at Matic and all, it's like 1000x, right? So the market did 40, Matic did 1000. So the next wave, you can anticipate that to be much lower or below the average fluctuation of the market. Now, is the average fluctuation of the market too low? No, you have a long way to go, right? On the macro, you can even say like, okay, even if this is going to be the wave 2 and wave 3, you can anticipate 70% of this happening in wave 2. If you're conservative, you'll say 50%. But still, that's a 50x, which is higher than the last wave. So price that in your mind, otherwise the depression in the market is going to hurt your portfolio. So guys, if you received value for your time, please do hit that like and subscribe button. And if you have 3 to 5 more minutes, please do visit this channel of mine. This is a new channel and I hope you will like the content. I'll meet you guys on the next video. Bye-bye.